Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Chuck Mack, head of U.S. equities at Nasdaq. Chuck, it's great to see you as always. Welcome back to Trade Talks.
So great to see you, Jill. Thanks for having me.
You got it. It was an incredibly busy year, past couple of years for the equities team. Give us a recap of recent market activity for the year.
Well, as you said, it's been incredibly active over the last couple of years, and that really hasn't slowed down. We had been anticipating a potential for a little bit of reduction in activity in the market, and we really just have not seen it. We're continuing to roll. It's continuing to be active. Retail is continuing to be engaged, and so we're really expecting that to keep going. And it's a fortuitous time to ask me that question, because this week is what we call quad witch, where we have monthly options and futures expiration, as well as some index rebalances such as the Nasdaq 100. So we're going to see a ton of volume tomorrow, most of which will be in the close itself.
Right. And Chuck, when you talk about retail participation, you expect that to go through 2022. Have retail traders really made that much of an impact in the equity marketplace?
Well, it depends what you're asking about when you say impact. From the perspective of growing their presence, which produces a lot of activity in the market, absolutely, there's been a significant impact. And a year ago, or in the beginning of this year, really, we saw some really active stocks that increased in value where you might not have typically seen that. And that actually produced a lot of discussion in the market. You saw Gary Gensler talk a lot about it. The SEC put out a report. This is the so-called meme stocks. Just the level of activity and engagement from the retail community has been great. We really saw it take off in 2020. And I think a lot of people attributed that purely to, me included, by the way, purely to the fact that we had the pandemic locking us all down, and folks had more time to focus on individual investments and that kind of thing. But we really haven't seen it come off that peak very much. And so I think it has more to do with a secular trend that was already in play by the time the pandemic started. And so we're seeing that community continue to be engaged in the market and focused on their individual investments, which is really great. And we've even gotten involved too. We've got a bit of an education program going on to complement all the great work the retail broker dealers do. So I don't expect that to change anytime soon.
And when we look on the institutional side in 2022 expected trends, what are your thoughts around ETFs, institutions, fragmentation and consolidation within the industry?
Sure, there's a lot to unpack there. So I'll start with the institutions. One of the trends we spoke about 9 months ago was just this continued trend where you're seeing more and more, I'll say, specific use case focused solutions being developed for institutions when they want to execute large volume. And that trend really hasn't abated. In fact, it's continued to accelerate. Our midpoint extended life order, or MELO, was one of those such solutions, but we've seen lots of other things come up. We've got other exchanges with solutions. We've got dark pools with specific solutions. We've got new dark pool, PureStream, which we're interested in. They have a specific solution for the buy side. So I think we'll continue to see that develop for quite some time. And barring any type of sort of drastic regulatory change, I think we'll continue to see that develop in that way, and that trend will at least continue, if not accelerate. From the ETF perspective, we have seen so much growth in assets and ETFs. I mean, it's been tremendous. I remember talking about it a few years ago and it being $1 trillion total assets under management for ETFs. This year alone, globally, we've seen inflows of $1 trillion. So last year in the US alone, we had 500 billion, which was a record. This year in the US alone, we're over 700 billion. So we've shattered that record. And really, even though that it feels so big, I think we're still in pretty early innings here. And so I think there's a lot more to go. And you're seeing a lot more adoption of the semi-transparent structure. You're seeing more traditional funds that are mutual funds coming out and saying, hey, we're going to have an ETF version of all our funds. And if you think about how many mutual funds are in the market, it's in the thousands, 10,000 or so. So I think there's a lot of runway here in the ETF space. So we're going to continue to see that, and that's really why we've invested so much in our ETF platform, because we believe that that's definitely in the future. And in 5 years, if there's 8,000 listed ETFs, I would not be surprised whatsoever. I think the last thing you mentioned was consolidation, fragmentation. So I'll take those each separately. On the fragmentation side, we continue to see more venues to execute come to market. We've got some new exchanges in the space over the last couple of years. I wouldn't be surprised if we saw more in 2022. We've seen a couple new ATSs come to market, and so we might see that continue. But on the flip side, I think you may see some consolidation as well. With all the new exchanges, you may see some opportunities between exchanges to partner or get together or consolidate. There is value in scale and that kind of thing when it comes to operating infrastructure for the market. On the broker-dealer or bank side, I think you might see some changes there too, where you see some consolidation or something like that. So I think consolidation will definitely be something very interesting to watch in 2022.
And when we talk about the Nasdaq business specifically, what are some of the 2022 initiatives for the U.S. Equities Group?
Sure. So one, I'll just reiterate, our investment in our ETP platform, our exchange traded product platform. We'll continue that investment, continue to execute on that, and really our hope is to help issuers grow that business across the industry. At a finer level, we had invested a couple years back in some changes in the closing costs, and a lot of the feedback we got very positive feedback on those changes themselves. But we also got some suggestions around, hey, how is there a way where I could trade more after the close? Sometimes I just have more volume to do, wasn't able to get it all in the close. Is there something you could build for us? So we are building something we call the extended trading close, which will trade up until 5 minutes after the close at the Nasdaq official closing price. And so that's just another tool in the tool shed that we want to provide to asset managers so they can move big positions. And the last thing I'll mention is revolves around risk. So risk has certainly always been a part of the financial markets, without a doubt. And as a member of that market, we play a role there. And a lot of what we've focused on over time is system performance, throughput, resiliency, all that kind of thing. And now we want to pile something on top of that, which is a new risk layer we're going to put in front of our exchanges, where broker-dealers and their clients can have another set of protections when they're sending orders and messages into our systems to protect them, to protect us, and protect everybody in the market. And we really are excited about it because we do think it'll help these clients streamline how they manage risk in the market. They'll help protect the market. We also see it as a platform that we can grow upon and really help broker-dealers and their clients better manage that risk in the long run.
All right, and Chuck, in the last minute here, we spoke about activity and volume, just a surge that we've seen in 2021. What are your expectations into 2022? Do you think we can match that type of activity?
I do think we're going to see it continue, and for two reasons. One, when we're looking at it, both looking at the historical of this year and what we think was going to keep going, we don't really see a catalyst for change. We don't see something where it's going to really kind of shake something loose and slow everything down. And I think we're under a new normal, quite frankly. So I think we'll see that continue. And on the flip side, there's plenty of things that could be catalysts to drive it further. We had the Fed announcement this week about what they're doing with rates, which obviously is a factor. And there's lots of other macro things going on that could certainly drive volume and volatility and that kind of thing. So if anything, we could see even a new higher level in 2022, but at the very least, I expect it to continue as we've been seeing for the last few months.
All right, Chuck, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.